was the sign. Okay. Thanks a lot, Katerina. Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. Today is Thursday, March the 30th, 2017. Here, my local time is still 6 hours behind in GMT. 1 a.m. 10 minutes past the hour, 7 a.m. 10 minutes past the hour, GMT time. From Monday, I will switch the ST time, but the webinar will take place at 7 a.m. GMT, as always, regardless of the ST. And this is me, myself. These are my social networks, in any case that you're interested in subscribing. I would like to thank everybody for being around, all the guests. Rocas, my friend, how are you? Short Sense, my friend. Getstia. And of course, Katerina. Thanks for hosting, recording, supporting, and all that. Thanks a lot. So today we're going to have I don't know how to say it. When I have this kind of webinars, the ones that we are going to have today, I call them boring, because at least the pair that we will continue analyzing, the dollar-yen, is not precisely showing us very exciting opportunities in the next future, maybe the next 2 or 3 weeks, unless something really changes dramatically. And again, since we don't expect any kind of surprise from the Japanese economy nor the American one, at least for the next, I don't know, maybe month, more or less we could expect good data by the American economy. Next week we will have the non-farm payroll number. I assume that it will go in line and in tandem with the other non-farm payroll numbers, showing strength, etc., above expectations. So yeah, I believe that dollar-yen will have no surprises in the future, in the next foreseeable future. And the price action that is likely to happen in the next in the foreseeable future is very tight. We're going to analyze it at the end. Before, I would like to review what we were talking about on Tuesday. Was it? Yes, it was on Tuesday. About the stock markets, that maybe they were leading and being the thermometer of what was happening in dollar-yen. What we're seeing now is the daily chart of the American top 30 companies. We were mocking and having a laugh last webinar about what these marketeers and Bloomberg sell like a sell-off of the market, this candle. They were saying that was the end of Donald Trump's rally and I don't know what nonsense, etc. So yeah, as you can see, the market trying to consolidate below this double top, but you cannot argue this trend. So yeah, I don't know if this take profit pattern will continue to the downside, but again, look, we have the psychological to 20,000 here. So any further movement should be stopped here, at least in the short term. We don't have any fundamental reasons to believe that the bull market is over, and that is pretty simple and clear and straightforward. But well, we all know that when you have some trades profitable, maybe at some time you just want to take some risk out of the table, and maybe that was what was leading this. Besides the other reasons that we analyzed in depth in other webinars, like the spring heating in the Northern Hemisphere, Donald Trump held bill being rejected in Congress, etc. But my opinion, I still consider that was circumstantial, that this is natural, this is normal. Okay, and this is the Nasdaq 100, I believe. So here is what they were calling again the sell-off. Look how ridiculous that is. To call one red day a sell-off, it's like we really need to be aware of what we listen from the mass media, because I'm not going to criticize their job as journalists, because I have no idea what a journalist uh, should be, or what kind of a study they must have. And I believe that all journalists in Bloomberg are real journalists. They are not like unprofessional. But the thing is that when you are misinformed, or that when you need to inform something accurately, you need some kind of sources that are beyond your reach, because of course people that are actually making money are not going to sell or say the things in Bloomberg for Bloomberg to talk openly on those trades. So the opportunity gets reduced for these big sharks in the market. The best thing that you can encounter is that after some months, maybe you could find today some big sharks saying Bloomberg that they bought here, for example. But of course, after the fact, a lot of months after the fact, because that opportunity is already has no value anymore, because the movement already happened. So when we have these kind of predictions, again, from mass media or websites or webinars like this, you should take them very cautiously, because the most part of people that are trying to give an opinion on the markets, and you can include me in that list if you wish, maybe we don't have any kind of idea of how the markets really move. And no matter how good journalist you are, this goes beyond your expertise, because this has nothing to do with journalism. It's like believing that if you're a good trader, then you're a good journalist. That's a lie, and the inverse works exactly the same. So yeah, at least the Nasdaq is showing way more bullishness, like in comparison with the United States 30 index. So well, again, I don't see any reasons for the markets really to panic. I was reading yesterday that actually it was filtered like a draft of what exactly Donald Trump wanted to renegotiate of NAFTA. But I didn't have the time to read it, because when I always see a leaking of a draft or something, I really take precautions and distance on this kind of information, because at times it is wrong and it's not complete. It could be only like Donald Trump would like to say, a fake news, and yes, that happens. So I just would like just to wait to exactly see how he wants to start renegotiating this thing. I really don't think that at the end there will be any major shifts, because if if for some reason this guy really wants to get a major overhaul of the NAFTA agreement in a way that only the United States gets benefited, Mexico will withdraw from that. So then, if you have that scenario, then you could see some turbulences in the stock markets in the United States, because of course the NAFTA agreement is something that it's very difficult to understand up to where has an influence in the economic life of the United States. There are no real serious studies on that could be used as evidence now, because it's a very complex thing. But the only thing is that we know that we are Canada, the United States, and Mexico are like attached together, even if this guy doesn't want to accept it. And maybe this kind of relationship is even tighter than the one that, for example, the UK had with continental Europe. Because, I mean, it is, again, it is something that this guy won't accept, but this relationship is so symbiotic. That thanks to having Mexico as commercial ally, the American enterprises, including General Motors that was bankrupt, had the chance to have healthier finances. So that is the importance of the relationship. And even for backup, the United States should keep Mexico close with a operative trade agreement if in any case the United States faces again some sort of this kind of crisis that has nothing to do with NAFTA. The 2008 agreement had nothing to do with NAFTA. Had to do with greed in the United States of people that didn't have money to pay mortgages, and what they did just ask for a second mortgage to continue paying and to buy more houses, etc. So it was pure greed and corruption of certain authorities that were looking elsewhere and not regulating this. And that crisis was in a very important way solved by a lot of enterprises moving production from the United States to Mexico. So in the common sense, and if logic prevails, NAFTA agreement should stay pretty much the same. Maybe updated. We were explaining last webinar that having an update on NAFTA would be good for everybody, for Canada, United States, and Mexico, because we have new technologies that are not included in that NAFTA thing. So that would be a good thing for the three of us. But the thing is that if this guy, and this guy only understands, he doesn't understand businesses as mutual benefits. He says that in a book that he wrote, that his negotiation, let's put it that way, style was to first provoke, and if he sees weakness in his adversaries, they crush them. They used this word in his books. I crush them. So this is the style of this guy. This guy really goes for everything for me. And if this guy really wants to get through this logic and apply it in a free trade agreement, that is not an agreement. That's an imposition. And then is when Mexico would say, you know what, this is not good for Mexico, so we withdraw. So that it wouldn't be good even for the United States. So I believe that unless we really see something major happening in the NAFTA renegotiation, and maybe we could see the stock markets having a break, maybe having a serious sell-off at the beginning, and then, well, who knows, maybe the bullishness will continue. But of course, NAFTA is something nobody knows. This is like just after Brexit vote, the pound sold off because we were not really knowing what we were in front of. Now we have more an idea of what Brexit is, what Brexit is about, how it will look at the end, etc. But at the very beginning, nobody had a single idea how that would look like. That would be the same. The United States and Mexico without NAFTA, and including maybe Canada, maybe, is something that we cannot even figure it out because it would take time. It's like Brexit. So at the beginning, that could lead to a sell-off. But I don't think that will happen. Okay? Precisely talking about pound, and since yesterday formally, we could say that we have the ending of the first stage of Brexit. The Prime Minister of the UK just gave in a letter to the EU to ask for the Article 50 to be triggered. I am surprised because when she said that by the end of March, Article 50 should be triggered, I believe she said that at the beginning of the year, in December, I really thought that she wouldn't make it, at least not for March. But yeah, she did it. So, well, now it's time just to pass the page and to see what's next. At least in the next 2 years minimum, we will continue having things exactly the same way. So even for bears, if somebody would like to believe that actually Brexit will mean the end of the UK as a strong economy, even for those bears, having a huge rally up to the 130, to this gap, you remember that I've been talking about too many months about this weekend gap after Brexit that was not able to be closed. I expect that the price, before really, in any case, this continues selling off, this should be closed. So this should be the time for the pound to do that. I really don't think that this will continue going lower because we just had all the necessary bearishness on that topic. We don't need any more bearishness because Brexit is not a surprise. This is a reaction when the market gets misfooted. And then it continues selling off. But now Brexit is factored in. And according to the market forces, UK Brexit worth $125 per pound. Okay? So that is the value in the market of an operative, ongoing Brexit thing. We dropped from the almost the 150, 148 to this. But we have this gap. So this is like the line in the sand that would reset things. It's like what is happening in Mexican peso now. We have a huge, massive bullish movement after precisely the market being misfooted, predicting wrongly that Donald Trump was not going to win. Actually, he won. And then dollar skyrocketed and Mexican peso sank. Now the market is getting, and I'm going to show you the chart. I don't know why sometimes I have problems opening the charts in Forex. I can open the Mexican peso chart so we can, I mean, this is only how you say it, a representation, visual, to have a visual. Okay. Here it is, Mexican peso. This is Donald Trump's election, and it's been in a bearish movement. The market is trying to reset things. It's trying to, the message of the market is, okay, Donald Trump is not going to be able to do all the crazy stuff he said, and the more we confirm that, the more the Mexican peso gains terrain. So I believe that this is the ultimate target now, to reset that. And from that moment, we could then resume the fundamental bullish trend. Because fundamentally, Mexican peso is going to the downside and dollar, and American economy is going to the upside. So yeah, this should continue. But in the meanwhile, it's apparently wanting to reset things here, and this is the same thing here. I don't believe that pound will try to reset Brexit up to this level, but who knows, maybe we could have that surprise. But what I am very confident is that at least the price will want to close this gap, only because of convenience, if you want. This gap, having a gap not being closed, feels uncomfortable in the future. And I can tell you that a lot of people that were buying here or here or here are eyeing this. Or maybe this stop, but close on this thing. And maybe this could be, could continue to the downside. I don't think so. What I believe, and I've been commenting that in other webinars, is that I have very bullish expectations on the UK economy and on the pound value. So I was saying at the beginning of Brexit that UK leaving EU will actually help the UK to become an even stronger reserve currency, and in maybe in 50 years to have the same level of trustworthiness as the dollar. That's what I believe. Maybe I'm wrong. In 50 years, I will be 80. So I don't know if I will be wrong or right. I don't know if I will be still alive. But who knows? Okay, I believe that Brexit is something that it will be very good for the UK. I mean, it's not going to be the end for the EU, but I believe that UK moves much better without certain limitations that belong to the EU imposed. That's what I believe. It works way better for other economies in the EU zone belonging to the EU concept. But well, we need to wait and see. Again, I was reading, I don't know where, the source of this information that I will tell you, that just formally, when the Miss May delivered this letter, the pound sold off. Yeah, this is selling off. When you put all this in context, being the price being able to, this supports region, being able to stop the sell-off, this is nothing. Okay? When we had the chance to open in this case a gap to the downside, very, very close to this level that actually, that by the way, I don't know if you remember, I commented that for me this was the end of the sell-off of the pound, and this should be like a no, like a land in the sand support. Okay, so this all became the region of support, and yeah, we had this, and the market just moved up like here and here, having this sell-off supposedly is again a heads up that you need to really have your own opinion. If you share that opinion that this is the sell-off and then the pound because now we have confirmation, I mean, the markets anticipate things, try to anticipate things. That is the job of the markets. That is why when they are misfooted, they move very quickly. They were not anticipating correctly here, Brexit. So that is why the major shift. But usually the markets try to anticipate the news. So here, there's nothing to anticipate. It's already factored in. So if you want to believe that this should continue selling off, it's okay, but you need to get in there with your own conclusions and maybe have outside information as confirmation, but not allowing that those informations outside your opinions shape the structure of what you think the market is doing. Okay. What really worries me is euro dollar. I'm not very well informed on exactly if Marine Le Pen will actually run or not. I mean, to be in the ballot. I don't know. I believe that we're still in that stage to see if she makes it or not. I don't know. But I have this feeling that if she actually, if not, she's already confirmed as to be in the ballot. I mean, in this thing where you vote, I have the feeling that she will win. And that would be, I don't know, a disaster for the EU. So, this is a gamble, and I need to be honest with you. This is like saying Donald Trump is going to win. Okay, we don't have any kind of remotely acceptable instrument to predict that. We have no idea what's going to happen. So, I said some webinars ago that I was going to stay aside euro dollar and euro yen. What is more or less getting interesting is euro yen. I don't know if I'm going to start trading it in the next days because of the risks of this. If for some reason, actually, if Marine Le Pen is votable and wins, I wouldn't be surprised that in a snap this gets to parity. So everything that you have on euro yen and in euros, if you are misfooted, you could face a lot of problems. I don't know if Dukascopy is going to reduce exposure to reduce the leverage on euro-related assets just before the formal presidential elections. I am pretty much sure that the Dukascopy is going to do that because the risks are huge. In any case, that maybe this gets to the imagine to the party or gets because look, it just made this bottom. This is the daily chart, close to the 103. Of course, having a surprise Le Pen election, of course, minimum it will get to the party. If we have how many pips were the pound was? Let me just show you that again. So we were close to, let's say, to 1.5. Just immediate. Let's just believe that here is the one. What you want? 133. So with one, yes, one. This should be like more or less 134. So it would be like 1,600 pips in 2 days. The initial reaction, and we are in euro dollar, 800 pips from parity. So it would make more or less sense. So in any case that the euro dollar is the most popular pair to trade, but be very aware to take precautions before the French elections, because the mass media again is saying and assuring that Le Pen has no chances to win. I don't really think so. Let's remember that I don't want to get into this because we talked about up to a nausea point during several months this Russian factor. I do believe that all major superpowers try to have influence on others for their own interests. This is the case of Russia, and this is the case of the United States, and has always been. I do believe that at some point Donald Trump got aid from Russia in some way. Why? Because of course they were interested in having in the president somebody that was not that hostile against Russia. That makes complete sense. Of course they were not going to support Hillary Clinton when Hillary Clinton was saying that this Vladimir Putin was a dictator and the worst and evil on earth. Of course, it's ridiculous. And what major superpowers do is to precisely support the most, let's put it this way, friendly part. And that's what happens all the time. The United States is actually now trying to influence in Russia to weaken Putin. That's been something, and overall in the surrounding areas, the imposition of the Ukrainian after the coup, the imposition of a president in Ukraine pro-EU and pro-America and pro-United States. That is why Vladimir Putin reacted the way he reacted. So I believe that Vladimir Putin was a way clearer shift of attitude towards Russia from the United States. And that is actually not happening. And we just saw Marine Le Pen talking good things about Vladimir Putin. So it would make sense that at some point Vladimir Putin in some way tries to help a candidate that is friendlier to Russia than others. So let's not underestimate the power of how this chess game is played. You will always have foreign interest and political foreign interest involved in your local elections. That is a fact. So, yeah, I wouldn't rule out that at some point, with some help of Russia or, yeah, Marine Le Pen could get into the presidency of France. Let's remember that Vladimir Putin distrusts EU because not at the beginning, but it evolved in a way that was like the appendix of NATO, meaning EU equals NATO, because apparently at some point NATO wanted to extend all the influence to the all EU, like if both things were the same, and that has been putting Vladimir Putin in alert, and that's completely natural. So the most interested one in trying to weaken EU at some point, if EU doesn't declare independence from the United States opinion and NATO impositions, is Vladimir Putin. So it's going to be very interesting to see how this is solved. That is why I'm not that sure that Marine Le Pen has this completely lost. We just had what is called a terror attack in the UK. I mean, and I say what is supposed to be, because for the kind of terrorist attacks that we see worldwide, in the UK what happened could have been a very fatal car accident. I mean, it was motivated for other reasons. It was a terrorist attack. But it's not the way we see it elsewhere. We just had in France, I don't know what happened, if it was terror related. It's somebody shooting randomly in a metro station, something like that. So all these things could help actually the speech of Marine Le Pen to gain more the last minute followers. It is said that at the end, exactly what made win Donald Trump was the exact 1 week before elections happening that the FBI said that was going to investigate Hillary Clinton. It is said that had a last minute effect. So I wouldn't be surprised to see something like this being profited in a way pro Marine Le Pen, that has just declared by her words that she would be Russian friendly. So yeah, don't take for granted that the mass media is saying that she won't win, because it could be like a Trump-like surprise, Brexit-like surprise, and the Euro thing could go to the party or lower. And I don't want to tell you, if Marine Le Pen actually wins, I believe that we are going to see the next financial global crisis, with no doubt. Because then you would have huge risks for the EU to really fall apart. And since the EU is the second biggest bloc, economic bloc, of course that would have massive effects overall, because Greece, for example, has a lot of financial problems, Italy. So this would only, having Le Pen winning would hit just at the heart of the EU. So yeah, we need to be aware and to take precautions on where you have your money, if you have positions open, if you have euro exposure, etc. Okay, but well, this is the euro thing. We're just we had this latest bullish attempt here, retesting these heights, and then the market is getting lower. The volumes are not very representative, so hopefully I am wrong, and you will continue. In my, as I've been saying a lot of times, I like the EU idea. I don't like the EU leaders. I don't want to see the EU concept to fall apart. It would be great to have to see it prosper the way it deserves to prosper. Not under Angela Merkel's leadership, because it's insane. But well, at some time this woman should just simply step back and allow new blood, new ideas just to shape the future, the next 20, 30 years of the EU. So let's wait. Now, what we're going to talk about is my two preliminary price range boxes. I want to stress this out. This is preliminary. This is not like the levels that I would post in the traders blog, because these are under review. Okay, I am reviewing these levels because I have two potential. So I am seeing whether to choose one or whether to find a way to make it one. Okay. So this is the first. For the next maybe 2 to 3 weeks, what I am expecting is and you will compare this version with the next one. According to my readings, the market is potentially inside this trap. We have a very tight upward resistance and a very strong support that goes from here to the last moment of my price box interactions. Meaning, I don't think that this should continue going lower. But since the market is trapped here, whether it moves up or down, it's still trapped. This is a rectangle that we have had during some days. And now you see that this resistance is just at these levels. So in any case, the market hits here, it has strong possibilities, and that is why this is confusing for me. Because if the market gets here, not just because of this, but because of this price box, the market could simply jump back into this box again. Okay, so actually all this is like a huge, but this is not a resistance, because if this was a whole box, seeing it as one single box would look like okay, the resistance is here and the support is here, but no, we have two resistances here, two supports here, but actually you can envelope them in one single big thing. If it goes to the downside, well, we have good support. Theoretically, fundamentally, yes, this is still looking to the upside. We still have the 110 to break, but now we have a very big support here. This, how I love to call it, this time cliff. in this case, it's not a cliff to the downside, it's to the upside. But it's a cliff if you want to. If you put it inverse, this is a cliff. I am not convinced still that if the market, because if you see, no matter what, we will get here at this point with no ceiling. And even though I am bullish on dollar yen, I see it very difficult maybe to see after this sell-off to have, let's say, the market hovering here and then moving suddenly up here in this time, because this would allow to regain all the momentum and maybe get here in the next 2 or 3 weeks. I mean, that can happen, but statistically that is very low. It has very low chances to happen. That is why, not because, wait me a second, please. Well, you know that being almost 2 a.m. in the morning here in Mexico, I'm suddenly hearing noises outside my house. Put the red alerts, but I just thought that it's a cat. So, no worries. So, okay, I would, I mean, this could happen because this, I mean, if this is true, we should see something like in here, you see? It would fit even to the pip. If we move here to here, it would move here. We have fundamental reasons to believe that that could happen, yes. So, I am not convinced if maybe I should open this at a cliff also, to give way to maybe say, okay, maybe this could happen to the upside or downside. But the thing is that in the next days, I believe that the market should hover like in here, or not move if it moves here to be rejected, or if it moves down to be rejected to the upside. But these are too many days, and we have to remember that in the next weeks we will have what is called a holy, how do you call it in the Christianity? Holy Week, I believe. And even though that is not that popular as Christmas, but usually on these dates we have low liquidity. So yeah, it wouldn't be strange to have in these days big movements. But I don't know why I'm not still convinced, okay? And this not conviction is represented in my second alternative scenario. It is pretty much the same, but as you can see, for example, the support has not even been touched. In this case, has already been touched, and it's connected to the 110. In this case, the support starts below the 110 and goes to the 109.50. So, if this is true, we could even have a bigger momentum to the downside up to here. As to believe that this both lines represent my true feeling and true bias on dollar yen. Whether it's higher or lower, the support, this should be good enough to stop it. In this case, and I hesitate because I don't know if this resistance should be here or even up to here to stop the price and to force this to maybe hover here. I don't think that in the next days we could have a surprise movement to the downside, to the upside, because it would be like this scenario. If this happens to the upside and jumps here, we have open ceilings here. It would be the same thing here. The difference is that here we're already trapped. We are not trapped. We could have that bullish movement up just now to have a jump back and up. But here it would be like jumping up and down, but being here is a warranty of, well, not a warranty, but having high probabilities maybe of a movement to the upside. I'm not really convinced if this is the real interaction of price, the potential interaction of price. I'm not sure if I should move this up to here, but if you see, if the market is not good enough to break it, it should hover here for the rest of the week and then just have this to jump after. It's not the same scenario here. The bottom line scenario here is that this is poised to the upside, period. Whether it goes to the 113, 114, 115, that's irrelevant. But I said, like, this shouldn't be this easy. Because if I am not the only one seeing this, it would become, I mean, it is almost impossible that you find these things. Okay? So that's why I'm doubtful. But this is the same here. So this is why I'm thinking I am finding these two very same cliffs, or in this case, yes, to the upside, to the ceiling, with no ceiling, in this and this. The difference is that we have a resistance here, but the resistance here is not really thick. So yeah, it is really like having me second thoughts on if this could be this obvious. Okay. Usually the markets are not obvious. That is why I distrust this. So I need to review this again for the next days, overall after some days, just to see if the price, because maybe the price box here, it should be here with this price box higher than this. So I don't know if to mix them both or what to do to make it like have more likelihood. I mean, I am fundamentally biased on this, so I should be happy to see in both analyses these things to the upside, but in probabilities for this to happen is not that common. Okay, so these are my two preliminary price action boxes. I will continue reviewing them in the next days. Tomorrow, well, next day is tomorrow. Tomorrow is Friday 31st, the last day of March. So maybe depending on the tomorrow's price action, I will have a clear idea what to propose on Monday. But yeah, as you can see, it looks promising. So I just want to confirm that maybe we could have a time window that could lead movements to the upside or not, at least in my opinion. Okay. So I would like to thank everybody for being around, for showing up. I would like to thank all the guests, Rocas, Sharpsons, and of course Katerina for hosting, recording, all of you for your preference. Remember that tomorrow, hopefully, I will be able to broadcast. The most likely thing is that I will. So, because I really want to keep you updated of this price boxes, because this is really interesting. This is not seen that often. So, it's time for me to say goodbye. Remember that I expect you tomorrow at the same time, same place. This is Alberto Alvarado. Remember to trade safe, be safe, and bye-bye.